Welcome to this channel. My name is Philip. Today I'm going to talk about Forex basis, that is how to calculate peak value and also the lot size of currency pairs. We've all come across the word exchange rates or the term exchange rate, but most of us don't really understand what it means. So the exchange rates are the rate at which one currency can be exchanged for another. Anytime you hear the word rate, it means over time. So anytime you hear the word rates, it means over time. It means over time, which means it is not going to be constant, but rather it is going to change as time goes on. The exchange rates are quoted in pairs such as Euro USD, GBP JPY, USD CAD. So when you look on your trading platform or any trading platform, being TradingView in any platform, you find your exchange rates being quoted in what? Pairs. Example, Euro against USD, GBP, JPY, USD, CAD, sorry, USD, CAD. So the exchange rates are quoted in pairs such as the Euro USD, GBP JPY, and USD CAD, and so many more. The Euro USD means the euro against the United States dollar. So this pair means the euro against the United States dollar. And this pair also means the GBP or the pound sterling against the Japanese yen. And the USD CAD means the United States dollar against what? The Canadian dollar. So anytime you see a pair such as the euro against the United States dollar, the pound sterling against the Japanese yen, the United States dollar against the Canadian dollar, the first currency in the pair is the base currency. So from here, this is our first currency in the pair. So the first currency in the pair is called the base currency. And then the second pair in the second currency in the pair is called the quote currency. Okay, so any pair you see, the first is called the base currency, and the second is called the quote currency. So this one too, the same thing. The base currency, and this one too is the quote currency. Okay, yes. And one thing you have to put in mind is that anytime you see a pair written like this, euro against the United States dollar, the pound sterling against the Japanese yen, the United States dollar against the Canadian dollar. So the first currency in the pair is always what? 1. So with this euro against the United States dollar, the first currency in the pair is 1. The pound sterling is what? 1. And then the USD in this USD card pair is what? The USD is what? 1. This means anytime you see you watch on your trading platform and there's an exchange rate, maybe you go to euro against the United States dollar, the currency or the numbers you see on your chart is always what? The second pair or the quote currency or the quote pair. Okay, that is for the euro against the USD dollar. The numbers you see here is what? All for what? The USD. Okay, because the euro is always 1. So if you are having 1 euro, the numbers you see here is what? The USD. So maybe if you're having 1 euro and the current exchange rate of what? Euro USD is what? Let's take this for instance. 0.9083. So it means if you are holding 1 euro, you need 0.9083 United States dollar to get what? This 1 euro you are holding. Same applies to USD card, GBP, JPY. So always they are always 1 in the currency pairs. And the second one is what? The ones that are always brought out or written your trading platform. Okay, so we have about five different types of currency pairs, but for the sake of this video, I'm going to talk about only 3 main types of currency pairs. So we have the major pairs, the minor pairs, and the exotic pairs. The major pairs are the most traded currency pairs in the world. They mostly involve the USD, that is United States dollar. Okay. So example, we have the euro against the United States dollar, the pound sterling against the United States dollar, United States dollar against the Japanese yen, and United States dollar against the Swiss franc. So these are the main or the major pairs. They are the most traded currency pairs in the forex markets. Among these, the Euro USD is the most traded pair, which takes about 20% of daily forex market, followed by USD JPY. Aside these four pairs, we have other three pairs which are considered as major pairs. So we have another or other three pairs which are considered as major pairs. They are Aussie dollar against the USD, the United States dollar against the Canadian dollar, and the New Zealand dollar against the what? United States dollar. So we have the Aussie dollar against the USD, New Zealand dollar against the USD, and we have USD against the Canadian dollar. So these pairs are called commodity pairs. They are the first currency pairs from countries with large amount of commodity reserves. The commodity pairs include pairing the United States dollar with Canadian dollar, New Zealand dollar, and also the Australian dollar. So basically, we have seven major pairs. So on to the next one, we have the minor pairs. These are the pairs that do not include the United States dollar, but they involve the other major currencies. So the minor pairs do not include the United States dollar, but they involve the other major currencies. From the major pairs, we have EU as one of the major currencies, the GBP as one of the major pairs, JPY as one of the major pairs, Swiss franc as one of the major pairs. So the pair of these currencies aside the USD is what they are called the minor pairs. So let's write some of them. So we have the euro against the Swiss franc, the euro against the pound sterling, the pound sterling against the Japanese yen, the euro against the Japanese yen, and many more. So it's just about pairing the major currencies aside the USD, and you get what minor pairs. And lastly, we have the exotic pairs. These are the pairs that include currencies of emerging markets. These pairs are not liquid and spread are much wider, so they are less traded in the forex market. Exotic pairs. We have, so for example, we have USD SEC, and that this USD credit is what the United States dollar against the Swedish krona, and we also have USD try, and this is also United States dollar against the Turkish lira. Okay, now you know about the currency pairs. Let's talk about the pip values, the pip difference, and how to calculate for the lot size of the currency pairs. A pip is the smallest price move a given exchange rate can give. So a pip pip is the smallest price move a given exchange rate can make. So a pip is the smallest price move a given exchange rate can make. A pip is the smallest price move a given exchange rate can make. Example, the exchange rate of Euro USD on Monday was 1.0750, but 2 days later, the exchange rate is 1.0761. So from what? So for a practical example, the Euro USD on the exchange rate on Monday was 1.0750, and on Wednesday the exchange rate is 1.0761. You could see there isn't a big difference, but it is rather slight change of movement, and that small change in the price in the exchange rate is called a pip. So when you look at there's two different exchange rates, you could see the difference in them is what is very slight and very slim. So that small change in exchange rate is called a pip. And for us to find the pip difference, we just subtract the smaller number from the bigger number. So our bigger number is going to 1.0 minus 1.0750. So we just subtract. We're going to get 1. And we're going to get 100.0. Now the difference is 0.0011, which is the same as what? 11 pips. It's the same as what? 11 pips. We are going to talk about how we got it to what 11 pips and why it is not 0.0011 but it is 11. So a pip is 100 of 1%. Mathematically, that's going to be 100. That is 1 over 100 times 1%. That's going to be 1 over 100, which is going to give us 1 over 1 over 10,000. And this 1 over 10,000 is the same as 1 over, sorry, is the same as 0.0001. This means currency pairs are coded to 4 decimal places. So from this 0.001 is the same as what? 1 pip. So this 0.0001 is the same as 1. This means currency pairs are coded to 4 decimal places except the pairs involving the Japanese yen, that is JPY pairs. Example, we have Euro JPY, USD JPY, GBP JPY, Yeah, and all the pairs involving the JPY. So let's say the current price of Euro USD is 1 point. So the current price of Euro USD is 1.0761. The current price of Euro USD is 1.0761. From the 1 PP calculated, from the 0.0001, this means currency pairs are always quoted to 4 decimal places, and the feet number that we always see on the trading platform are not used in calculating the pips, because they are used to only determine how long we are going to get one pip, just like the seconds in what in the time. It is only used to what know how long you are going to get 1 minute, so it's not really needed what calculating the time or saying the time to somebody. So currency pairs are always quoted to what 4 decimal places. So when you have this 0.0001, it means 1 pip. And this, anytime there's a change in this one, there's a change of what? Ones. And with this, there's a change of tens. With this, there's a change of hundreds. And with this, there's a change of thousands. So this so anytime there's a change in this one to maybe three, there has been a change of only 2 pips. And anytime there's a change in this 6 to maybe 8, it means there has been change of 20 pairs. So if you subtract this 6 from the 8, you're going to get 2, and that 2, because it's in the tens, is what 20. And if there's any change in this 7 to what maybe 8, there has been change of what 100, because you subtract the 7 from the 8, you're going to get what 1, and that 1 is in what in the hundreds. So we have what 100 pips movement. So let's take a practical example of what I'm talking about. So let's say the current price of let's take the current price of Euro USD at this price 0.0 0.841. So this is where it is. So this 0.841 zeros zero. So we don't add the fourth number or the last zero, because it's called a pipette. It's not using calculating it. So with this price, and let's say it moves to 0.8430. For us to know the pip difference, we subtract the smaller number from the bigger number. You're going to get 0.8430 minus 0.8410. So we just subtract, so you're going to get 0 to 0.0. And with this 0.0020, it means the pip difference is what 20 pips, because the 2 is in what in the tens. So when you compare to here, you can see here's the ones and here's the ones, here's the tens, here's the tens. So our pip difference is what 20 pips. So you write the pip difference is 20 pips. Okay, let's take another example. Let's say we have the price of USD at the price of U at 1.3845 moves to 1.3945. So we are going to subtract the smaller number from the bigger number for us to get what the PIP difference. It's going to be 1.3945 minus 1.3845. So by subtracting, it's going to be, here is going to be 0, 0, 8 minus 9 minus 8 is going to be 1, here is going to be 0 0.0. And this 0.0100 is the same as what 100 pairs, because this one is in what? It's in the hundreds what position. Okay, because here's our ones, here's our tens, here's our hundred. So this give us was 100 pip movement. So the pip difference as well is 100 pips. Let's look at last example. So let's say we have other currency pair aside the USD. So maybe USD CAD, USD against the Canadian dollar. The price is at 1.3783. This price moves to 1.3862. So for us to calculate the pip difference or the pip movement, we subtract the smaller number from the bigger number, and here is going to be 1.3862 minus 1.3783. So by subtracting, we're going to here to be 970.0. Because this 7 is in our tens, that means the pip difference is what 79 pips. So the pip difference is 79 pips. That is how we calculate the pip difference in currency pairs, except those involving the Japanese yen. I've already said the Japanese yen has different way of what calculating their pip value, because they have very low value in the forex market. So we have different way of calculating the pip values of the Japanese yen. So the currency pairs involving the Japanese yen, that is the JPY. The pip value is 0.01 instead of 0.001. So this is what I mean, the JPY pairs. The pip value is 0.01 instead of 0.001 of. This is because yen pairs are typically quoted to two decimal places, reflecting relatively lower value of the yen compared to other major currencies. If you look at the other major currencies, their pip value is what? 0.00001, which is the same as 1 pip. So this is the same as 1 pip. But for the JPY pairs, 0.01 is the same as what? 1 pip. When you look at when you look on your trading platform, being TradingView or other trading platform, you can see the yen pairs have what? Different values. They are always quoted to what? 2 decimal places or maybe 3. With the third one, not we don't use the third one to what? Calculate the pip value, because it's also what called a pipette and it's not needed in what? In the calculation of currency or the pip movement. So we just use what? The 2 decimal places. Okay. And that is because the yen pairs have lower value. Because they have the lower value, they just what? Divide the 0.001 by 0.01 to give it value so that it can be traded in the forex market. So the reason why we have this 0.01 as a what? 1 pip of the yen pairs is because this 0.0001 was divided by what? 0.01. So 0.0001 was divided by 0.01, so that we can give it what? A value. So giving it a value, you divide it by 0.01. That's going to be 1/10,000 times 1 divided by 1/100. This is the same as 100/10,000. This is going to give us 0.01. This 0 cancel this 0, then this 0 cancel it. So you're going to get 1/100, and that's the same as 0.01. And this 0.01 is our 1 pip. It's our 1 pip in what? The Japanese yen pairs. 1 pip instead of the 0.0001 we know for other major currency pairs. So calculating the pip difference or the pip movement in the Japanese yen, we still subtract the smaller number from the bigger number. So let's take practical example of the Japanese yen. Let's say the price, the current price of EU JPY is at 167.48. And before we calculate for the pip difference or pip movement, this right here, this 8 is our ones, this is our tens, this is our hundreds, this is our thousands, and this is going to be our 10,000 and so on. So with this, here is our 100, then ones. It means anytime there's a change in this last number, it's probably what? Ones, or it's going to be a small change. And here is what? The tens. Here is going to be the hundreds. Here is going to be the thousands. So by taking this particular example, imagine this price moved to, let's say it's moved to 167.66. We are going to subtract the smaller number from the bigger number. That's going to be 167.66 minus 167.48. So by subtracting, I'm going to get here to be 2 and here also to be 2.000. We all know that this 0.22 mathematically it is the same as 0.22. The same as 0.22. This 0.22 is the same as for 22 pips. Why is it 22 pips? So looking at here, this 4 is our what? Our tens. So our tens is what? Is where the 2 is, or the first was number is, so it's what? 22 pips. So it's the same as the pip difference is 22 pips. So let's take another example. So let's say we have the price of USD JPY at 155.73 moves to 159.63. So for us to know the pip difference, we subtract the smaller number from the bigger number, and that's going to be 159.63 minus 155. So it is 1, it's not 1 point, 155.73. By subtraction, you're going to get 0.300. So mathematically 003.90 is the same as 3.90. Looking at this one, this 3.90, it means the pip difference is what? 390 pips. So because this 3 is now what? It's in the hundreds. Because this is what? This is our ones, and this is our tens, and this is our hundreds. So we have 390 pips movement equals 390 pips movement. So that's how simple it is. And that's the way of calculating the pip movement of currency pairs. So the next one I'm going to talk about is the lot size.